As the Reserve Bank of India or RBI Monetary Policy Committee or MPC enters its second day of deliberations on February 6th, economists are expecting the committee to announce a 25 basis point or BPS rate cut. This would mark the first such reduction in 5 years. The meeting holds special significance as it is the first under the leadership of newly appointed RBI Governor Sanjay Malhotra, who succeeded Shaktikant Das in December 2024. Amid mounting economic challenges, both external and domestic, the MPC is expected to address key interest rates, domestic liquidity conditions, and volatility in the Indian rupee. Economists such as the Shreyas Sudhani from Barclays predicted a 25 BPS rate cut alongside non-rate measures to stabilize INR volatility and improve liquidity, which are crucial for the country's economic stability. Here's a special report from Foresights TV. The expected rate cut comes at a time when India's economy is grappling with a range of pressures. The country has witnessed a slowdown with GDP growth projections revised downward from 8.2% in FY24 to 6.4% for FY25. The domestic economic situation is further complicated by persistent inflationary concern and the depreciation of the INR, which has reached 87 against the USD. The RBI has maintained a higher for longer repo rate of 6.5% since February 2023. But the growing concerns regarding economic growth and inflation are pushing economists to predict an imminent policy rate cut. Additionally, the global economic environment, including a stronger USD driven by changes in US monetary policy, has led to capital outflows and currency depreciation in emerging markets like India. Suman Chaudhary, Executive Director and Chief Economist at Acute Ratings, emphasized the challenges of balancing the need for growth stimulation and inflation control in light of the external headwinds. The RBI has already introduced several non-rate measures, such as the announcement of an Open Market Operations or OMO purchase calendar, long-dated variable rate repos or VRR, and USD INR buy or sell swap, all aimed at addressing domestic liquidity concerns and smoothing INR volatility. These measures are seen as the RBI's prelude to an imminent rate cut in the upcoming MPC meetings, signaling its readiness to address the liquidity deficit, which has exceeded Rs 2.5 trillion. The government's fiscal strategy, particularly in focus on boosting consumption through income tax relief in the union budget for FY26, also align with the potential rate cut. With expectations of a decline in inflation driven by softer food prices and the fiscal support from the budget, the RBI may be inclined to shift its policy stance to accommodative, further aiding economic recovery. Furthermore, economists such as Dipti Deshpande from CRISIL Limited see the expected CPI inflation reaching closer to the RBI's target of 4%, providing additional justification for easing monetary policy. Shishir Baijal, Chairman and Managing Director of Knight Frank India, also noted that the rate cut would align with the government's fiscal policies aimed at stimulating growth while managing inflation and currency stability. Despite expectations of a rate cut, challenges remain. Suman Chaudhary suggested that while a rate cut could provide short-term relief, the RBI may opt to delay its decision until April 2025 due to the ongoing volatility in global markets and concern about sustaining inflation control. Bond market experts, including Suresh Dharaka from Bond Bazaar, believe that while the 25 BPS rate cut is largely priced in, the real focus is on the RBI's future guidance on liquidity and its strategy for managing the depreciation of the INR. On the equity front, market participants are closely watching the MPC decision as a rate cut could signal a more favorable environment for growth, especially in urban consumption, which has been sluggish. Investors are also keen on how Governor Malhotra will address inflation projections and GDP growth forecast, as any immediate easing could provide much needed support to India's slowing economy. The RBI's MPC meeting is poised to make significant decisions regarding the country's monetary policy with expectations of a 25 bps rate cut. This move is seen as crucial to addressing India's economic slowdown, managing inflation, and stabilizing the INR. However, the RBI faces a delicate balancing act, stimulating growth without triggering further depreciation of the currency or undermining its inflation control efforts. The recent fiscal measures introduced in the union budget and the government's focus on reviving consumption provide additional support for the anticipated rate cut. While the RBI's immediate decision may center on rate cuts, its future guidance on liquidity and currency management will be pivotal in shaping market sentiment and supporting economic recovery. That's all for today. Thanks for watching Foresights TV with me, Asma.